Welcome. Today, we're doing a deep dive into it has to be one of the most fundamental and high-stakes shifts happening in global commerce.
It really is. We're talking about the massive move of the entire financial services industry.
Mm.
You know, banks, insurers, FinTechs, everyone over to cloud computing.
And it's so much more than just a technical upgrade, isn't it?
Oh, completely. It's a total transformation. I mean, we're talking about delivering immense computing power, storage, software, all through remote data centers instead of, those old server rooms.
And the drivers are pretty clear.
Simple but powerful.
Yeah.
It's the need for efficiency, the non-negotiable demand for resilience, flexibility, and really the ability to innovate at a scale that was just impossible before.
So we have a pretty comprehensive stack of sources here, and our mission today is to cut through some of that noise. We want to understand how different major economies are handling this.
From established markets like the US and UK to, say, the giants like India and China.
Exactly. And more importantly, how regulators are trying to balance fostering innovation with, well, maintaining absolute financial stability. So let's start with the established financial powerhouses in the West. What really defines the cloud strategy in the United States? The modernization challenge there seems just colossal.
In the US, cloud is absolutely core to digital transformation, especially for those huge institutions like JP Morgan Chase, Goldman Sachs, Bank of America.
And they're not going all in on public cloud, are they?
Not at all. They're primarily adopting what we call hybrid or multi-cloud strategies. And just to clarify, a hybrid strategy means they use a mix of their own private on-site infrastructure for the most sensitive data alongside public cloud resources. And multi-cloud just means spreading their workloads across several big providers like Amazon Web Services and Microsoft Azure.
And the reason for using multiple clouds isn't just for flexibility, right? It's really about risk management.
Exactly. It's about modernization, yes, and better cybersecurity, and cutting huge operating costs.
Yeah.
But multi-cloud is absolutely crucial for managing vendor lock-in risk and ensuring redundancy.
So they're protecting themselves, not putting all their core functions with a single supplier.
That's it. And you really can't talk about U.S. cloud adoption without bringing up Capital One.
Right. That felt like a huge moment for the industry, a real turning point.
It really was. They were a crucial early mover, one of the first major U.S. banks to go almost entirely into the public cloud. Their success showed the rest of the financial world a key insight.
That it could be done.
That it could be done, that regulated firms can operate securely and at speed in these third-party environments. It basically lowered the perceived regulatory hurdle for everybody else.
And at the same time, you have the U.S. FinTech, SpaceStripe, Coinbase, SoFi, who never even had that legacy problem to begin with.
Correct. U.S. FinTechs run almost entirely on what's called cloud-native infrastructure. To put it simply, they were built from scratch for the internet.
Sure.
They never had to worry about running their own server rooms.
Which gives them that incredible speed.
It's everything. That architecture lets them scale instantly, process huge transaction volumes, and roll out new features at a speed that traditional banks are now, frankly, desperately trying to copy.
Okay, let's look across the Atlantic. How has the UK approach been shaped by its regulators? Because the UK has been a real breeding ground for these cloud-native challenger banks.
Yeah, the UK approach has been very strongly shaped by regulation, specifically from the Financial Conduct Authority, the FCA, and the Prudential Regulation Authority, or PRA.
And those are the two big ones, consumer protection and stability.
That's right. And their focus is laser sharp on operational resilience. They want to see that firms have strong risk controls and, crucially, clear exit plans if they use cloud services.
So the regulators effectively set the rule book, and that kind of paved the way for new players to come in.
Precisely. You see digital banks like Starling and Monzo, which were built entirely on those cloud-native foundations from day one.
And that gave them a massive efficiency advantage.
Enormous. It's what allows them to deliver those seamless mobile-first experiences without the technical debt that their older competitors are still wrestling with.
But the traditional giants, Lloyds, HSBC, NatWest, they're all heavily involved too.
Oh, they are, and their challenge is so much harder. They have to migrate decades of existing operations while still serving millions of customers. They're pouring investment into cloud migration just to overcome the constraints of those old systems.
It's like changing the engine on a plane while it's in flight.
It really is.
Yeah.
And something that's often overlooked in the UK is that the cloud is the engine room for open banking. It's what enables all that secure API connectivity across the whole ecosystem. It makes everything talk to everything else.
Okay, and this is where the global picture really starts to diverge. When we look at Asia, The strategies are shaped by, well, just enormous scale and often government-led digital infrastructure. Let's start with India.
India's story is it's phenomenal. Cloud adoption there is driven less by individual banks modernizing and more by the National Digital Public Infrastructure, or DPI.
So things like their ID system, Aadhaar, and the UPI payments network.
Exactly. That policy framework creates an environment where cloud computing can operate at a scale we've never seen before.
So the cloud isn't just modernizing individual banks over there, it's actually supporting the core national payments architecture itself.
Absolutely. It's reaching hundreds of millions of people instantly. Cloud supports India's digital payments networks, government platforms, and for the fintechs and banks, they use it to scale things like digital lending.
And the really profound implication there is inclusion, isn't it?
That's the key. Cloud-based AI and machine learning tools can analyze alternative data like, say, phone usage or utility bills to figure out creditworthiness for people who never had a credit history before. The cloud is enabling financial services for the masses, and it's doing it fast.
Now let's pivot to China. This is a market that operates, for the most part, within the ecosystems of its own domestic tech giants. How different is that from the multi-cloud approach we just talked about in the US?
It's a very different model. China's financial sector uses the cloud extensively, but the infrastructure is overwhelmingly provided by domestic giants. We're talking about Alibaba Cloud and Tencent Cloud.
Which creates a very powerful but also more contained ecosystem.
It does. It's a different dynamic. They don't really rely heavily on the big global cloud providers in the same way the West does.
And what does that mean for the actual financial services that people use?
It means deep, deep digitization. You have digital banks like WeBank that rely completely on cloud-native tech and advanced AI to support massive volume lending, often to small businesses.
So whether it's mobile payments or wealth management, the cloud is what makes it all work at that scale.
It underpins everything.
Right.
The key takeaway from China is that the tech giants aren't just vendors. They are, in a very real sense, foundational architects of the financial system itself.
So we've covered 4 massive regions, each with its own unique strategy. But what are the universal benefits driving this change everywhere, from Africa to Latin America?
Well, cloud adoption is accelerating everywhere. In Africa, you see it supporting mobile-first banking in Kenya and Nigeria. In Latin America, it's the power behind Brazil's incredibly successful Pix real-time payment system.
And the neobanks like Nubank?
And Nubank, exactly. And even in Asia, you've got Singapore setting regional standards with robust guidelines from the MAS, that's their central bank.
So regardless of the specific country, our sources seem to point to 3 non-negotiable advantages. Let's talk about the impact of those 3.
Okay, so first is scalability. The impact is that institutions can react instantly to huge spikes in demand, like a sudden market event, a holiday shopping surge.
Yeah.
You don't buy servers and wait 6 months, you just click a button.
Right. Then there's cost.
Second, cost efficiencies.
Mm-hmm.
I mean, by moving away from physical data centers, institutions just slash their capital spending. They only pay for what they use. It's a utility model.
And the third one is the big one, I think, innovation.
This is the real game changer, innovation capacity. The cloud enables much faster development cycles, easier integration with fintech partners. It makes continuous innovation a reality, not just a buzzword on a slide deck.
That speed and flexibility are tempting, but let's be the critical voice for a minute. Isn't this massive global reliance on just 3 or 4 hyperscale cloud providers, Amazon, Microsoft, Google, creating an unprecedented concentration risk?
That is the crucial question.
I mean, if one of them failed for even a few hours, the global financial system could, grind to a halt?
That is the question regulators all over the world are grappling with.
Mm-hmm.
Concentration risk is perhaps the single biggest systemic threat the cloud poses. Now, cloud providers invest far more in cybersecurity than most banks could ever afford.
Of course.
But if a single provider has a massive outage or gets compromised, that failure cascades across thousands of interconnected institutions almost instantly.
So this means compliance and oversight have to fundamentally change. What are the global expectations now around security and data control?
The regulatory response everywhere is really emphasizing this shared responsibility model.
Okay, unpack that a little.
So while the cloud provider manages the security of the cloud, the physical buildings, the network, the hardware, the financial institution is always responsible for security in the cloud.
The data, the access controls, the compliance.
Exactly, the governance. You cannot outsource accountability.
So the bank has to maintain things like audit rights and have really detailed exit strategies planned out.
Absolutely. Regulators demand strong vendor management and clear paths to move critical workloads if a provider fails or if the relationship just goes sour.
Hmm.
But what's interesting is the move to cloud also allows regulators to demand better oversight.
Have
Well, these services facilitate advanced analytics, machine learning, real-time monitoring, which paradoxically improves core compliance functions like complex anti-money laundering systems and dynamic risk assessment. So when you look at the whole picture, cloud computing is now just a foundational element of modern financial services. And you can see that proven by the resilience and the innovation across the US, the UK, India, China, and all these emerging markets.
And looking ahead, the source material really suggests the strategic shift is, well, it's far from over. We're definitely going to see a deeper adoption of sophisticated multi-cloud strategies to mitigate that concentration risk we talked about.
And continued refinement of regulations.
Right, especially focusing on the oversight of those critical third-party providers and the very complex issues around cross-border data flows.
And this all raises a really important question, one for you, the listener, to think about.
Hmm.
As all these emerging technologies like advanced AI and eventually quantum computing come online, and they rely entirely on these interconnected cloud environments.
They can't exist without them.
Not at this scale. So how will regulators around the world balance that absolute imperative for rapid technology-driven innovation with the equally absolute necessity of maintaining global financial stability in a system where a failure could be instantaneous and systemic?